Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on the companies we mention. Please do your own research.
So, ladies and gentlemen, welcome to MUMS Upbeat Markets today, Monday the 23rd of February 2026. Without further ado, we'll go straight into our first guest, which is Colin Bird, Executive Chairman of Kendrick Resources. Welcome, Colin.
Thank you very much indeed. Nice to be here. Thank you.
And I understand you have some news from Kendrick today. Would you like to explain to the people what that's all about?
Yeah, well, as you were aware, and I think the market's, I don't think I know, the market is aware that we had an option on a rare earths project in southern Namibia, 60 kilometers away from Ludovic, the deep water port. And we had a period of 120 days to review that project, due diligence. And we're so impressed, we're so happy with what we see, that in actual fact we've decided to exercise the option and enter into a definitive agreement. Thereafter, we've got sub-agreements to do, like joint venture agreements, and the way we conduct business as the project matures. But nonetheless, this agreement is binding and exclusive, and we're now totally committed to the project.
So what are the terms of that, Colin? What percentage of this project will Kendrick end up with based on the agreement?
Kendrick starts with 70% of the project. We've got certain performance criteria, which is taking it to preliminary economic study. Or if there was a sale, if the third party wanted to buy, then it would be a 50-50 distribution to the two shareholders, ourselves and Bonya being the other group in Namibia. So 70-30 if we go to mine, 50-50 if there is a sale.
Okay, and I suppose it's a difficult question to know right now, but what do you think is most likely? This rare earth world at the minute is a bit crazy in terms of the Americans wanting in. We want European usage of the rare earths, because basically everything is currently Chinese based.
Well, the German Chancellor said last week that, and mentioned Namibia specifically, that we're going down there to actually catch up lost ground. And we're not going with delegations, we're going with money and engineering expertise and hardware that is necessary. So you're absolutely right, there's tremendous interest in this project. But I think there's something fundamentally wrong with the team, what goes into a project with the sale in mind. We're going into this project to work the project to basically identify all the key fundamentals, get them in from technical spreadsheet into financial spreadsheet, into structuring and all of those good things. So our intent is to mine, but the likelihood or the possibility, I think is the best way to put this, of an approach is always there. The interest is enormous. The use of rare earths is spreading, is progressing very rapidly, new uses. So I think that, Kenny Rogers used to sing that song, "Don't count your money when you're sitting at the table, wait till the dealing's done." And I think that's the way I conduct business. You've got to know when to walk, you've got to know when to run. Well, we've run right into this project. We're happy with it. We're happy with our partner. We like the jurisdiction. And quite frankly, the way it ends up is either going to be a mine or a sale. And I don't think I'd like to predict either. That we're very excited about this project. We're very excited about the fundamentals. And boy, are we very, very pleased, Kevin, with the amount of data that in actual fact we start off live with. This is not greenfields, this is brownfields.
Very good. I'd like to introduce Charles Archer, who's joined us, super analyst in the small cap space here in the UK. Charles, would you like to ask Colin any questions? You have written an article on it, so if anybody is interested, there is an article on Kendrick as well that Charles wrote.
Colin, it's really interesting, this, isn't it? Because on the one hand, while the market cap has shot up in the past few weeks, the rare earth potential here looks like it could have global potential. I mean, what would you say the reason for the mismatches? Is it just that we're early days still?
Well, first of all, I think I guess the risk element for the would-be investor is the fact that there's an option. So in actual fact, anybody buying the shares in the last few weeks, if you like, were in actual fact purchasing on the anticipation of an option being exercised. So I guess the risk level for a would-be new investor was much higher, because we may have turned around and said, for whatever reason, that we're not going to exercise this option. And so I think by exercising the option, we've taken the uncertainty out of the market. We can now openly talk about the project. I guess that the share price rise was that even with the information that was released and available to us, you don't have to be an expert in rare earths to know that the actual values, the potential tonnages, the type of rare earth elements that we've got, and the statement that we've made and we stand by is that this is in the top 3 undeveloped projects in the world, has to be a firm base for shareholders to invest. And the news we announced today, of course, will have given them much more confidence that we've made our decision, we've exercised our option, and quite frankly, the machine's on its way down there now. We're going to be drilling, we'll be putting a second machine in, and I think the most meaningful part of today's announcement is the size of the database, Charles, that we've inherited, if you like. It's got a lot more information than I thought, than I expected. It's metallurgical information, it's drill hole information, it's trenches galore, it's geophysics. So they're really, as I say, this is not a greenfields project. This is basically this hard work for an independent company now to actually sort of evaluate all this information, get it into context, see where the gaps are, and go as fast as we possibly can towards pre-feasibility study, which the definitive agreement requires. So all in all, Charles, that the share price has moved up, obviously, but nervously on the basis that it was an option. Now we've passed through the option stage, the definitive stage. This has to be the most undervalued rare earth project, again, on the planet in any stock exchange.
Yeah.
For the very, very reason that its fundamentals are superior to most projects by a long, long way. I mean, we're not talking about a marginal.
Yes, Colin. Well, the thing is that this seems to have been your modus operandi for many years, which is to acquire these brownfield assets where there's been a fair amount of work done, upgrade the work, do your own drilling, and then generate more value. And another company where this has worked splendidly is Bazant, where we're coming closer this year, hopefully, to production. So you can give us an update on that one potentially, please.
Yes, indeed. Bazant is going on right to internal targets. And we're moving exactly at the same speed as we expected, wanted to proceed. Kevin's always irritated when I won't give him a forward-looking statement, and that's why they use the word the internal rate. But key things we've done: we've moved the guys on site to an LZM, and we're busily replacing motors, which have, through the course of time, won't work for the future. Some motors want repairing, pumps want repairing, conveyor belts want repairing. All that's going on. Key items of equipment have been ordered and will be transported to site. We've run certain aspects of the plant over already, and we're very pleased with the results we've got, in as much as the plant is basically in very, very good condition. We placed the order for the pre-sorter. It's dying art. We've also placed the order for the screening and crushing facilities, and all lead items which could be long lead times have been ordered and deposits paid. The mining contractor has been appointed, and as has the transport contractor. So every aspect of the operation now is either in progress, or if it's not needed at a particular moment, has been secured. So our path to concentrate production very clear, and is proceeding according to internal plans. And as we sit now, we've only got pluses, quite frankly. One has had to be very careful of the dollar, and the dollar has meant that we have had to negotiate quite hard on a few occasions. So there's been swings and roundabouts there. But on average, we appear to be slightly in front of the game.
That's the name.
Made a few things are more expensive in South Africa.
Well, it's the name.
So yeah. all in all, progress is great, and we're very pleased with that progress. We have no reason to be concerned at the moment. You know what project management's like, though, and round the corner is always something lurking to give you a bad time at a difficult time. And the more you build it up, the more damaging any sort of negative material effect could be. But our eyes are wide open, and we're going to make sure that it will certainly be nothing internal. So we're very much on our internal target.
I mean, it's interesting, isn't it? You talked about the US dollar. Obviously, the dollar's got weaker, but then the flip side of that is the commodity pricing has got stronger. So building it becomes harder, but then once you're in cash flow mode, then you're generating. I mean, we're talking about, Extract, Bazank, Galileo, all of the companies in the portfolio. Once they start producing, they're producing at copper pricing numbers, gold pricing numbers that, for a lot of people wouldn't have been imaginable even a couple of years ago. So when you were developing these assets, did you foresee this pricing coming along or not?
Well, I've been I shouldn't really try and credit myself, but I'm going to. I'm not shy to. I've been the AIM market and the market bull on copper since 2016, 2017, and set my mission on developing a copper portfolio. And I think it was at the presentation last year or the year before,
back in 24
in the city, when I said wars were fought over oil, they probably will be fought over copper. A little bit tongue in cheek, Charles, but it's almost proven to be true. So, did I expect this? Quite frankly, Charles, I expected it 2 years earlier. It's a bit later than I expected. What do I expect going forward? I wish we were in production, by the way. What do I expect going forward? I expect continuing volatility, but I expect the underlying trend to be positive. I don't really go along with those guys who talk about $15,000, $17,000 copper. You've got to be careful you don't smoke your own dope. And I think the Australians seem to have it right to me. Sort of, you can pencil in as a forward sustainable price of about $12,000 per ton. I'm actually penciling in $11,500. As better than anybody, and have sort of gone in print at $9,300. It's still where we started, and $2,800 gold. It was a very robust project then. So if it was a very robust project then, it's a much more robust project now.
Well, I think
I'm not sort of watching the copper space every day, the copper price every day. I'm just basically getting on with it, and in the hope that my 11,500 plus, or 11,500 and plus, is the price that will come into production. If that is the case, I'm pretty sure it will be, then we've got a very robust project on our hands.
It's funny, isn't it? Because everybody was saying, "Oh, it's fine if the copper price goes really high, we'll just replace it with silver. We'll use silver instead." But now silver is problematic too. And I think one of the key problems that we have is that over the short term, yes, it's going to be volatile, but over the longer term, I mean, even if you just look at last year, 4 of the largest copper mines in the world either stopped production or reduced it massively. There's no new major discoveries. What happens in the next sort of 10 years, say, when the copper demand keeps rising and all the major mines, the grades keep falling, the production keeps falling? There's not going to be enough of it. So, you might think $11,500 is reasonable. I think it could go significantly higher. But I guess we shall see.
Yeah, I think it's better for me to keep my feet very firmly on the ground. But you have to be right. I think I've been heard to say this before. In 2016, 2017, I was talking about demand, making the assumption that new mine capacity would be coming on stream, but the demand would nonetheless stay in front. In my wildest dreams, and you asked me a while back, would I have thought? And in my sort of wildest thoughts, I had never anticipated the supply side would be so weak. And it's been weak by politics, weakened by politics, particularly Latin American politics. It's been weakened by the drive of the major mining companies to pay dividends and not reinvest money into the ground. It's been altered, stopped in places by environmental resistance to mining per se as a business. And all the winds have been against production, and the recognition isn't there. I'm sure it's there inside, internally, but I have difficulty believing that the majors are not addressing the situation by acquisition. But, we've seen the attempt by BHP and Anglo, that failed. Glencore, Rio, that failed. Had they have succeeded, you were just moving copper from one pocket to another.
Yeah.
So, Charles, it is serious. And then, I glibly say that I thought we juniors would bask in the sun. Let's stop talking about majors and talk about juniors. How many juniors are there with brownfields projects close to being ready for production? And if you look at our group of companies, we're probably well in the lead of companies who are basically close to production. And there's not many to compete with us. And sadly, as I look around, I don't see how, Toronto Stock Exchange, Vancouver, Australia, I don't see an awful lot of new capacity, which is advanced as what we've got, or indeed as advanced as the world needs.
Yeah.
Porphyry is going to take you 15 years to bring onto production. These small mines doing 10,000 tons a year are going to help to address the shortfall. But most of those are 4, 5, 6 years away. So the next 2 years could see really sharp, unmanageable gains in copper. And, I, as opposed to an advantage, I just worry about that because there are no substitutes. And I've always said, and been consistent, that don't hang on to electric vehicles as the real drive for copper. I think it's basically the progression of mankind. More disposable income, bridges, cars, cell phones, the basics are the drive for the increased copper demand. And I never, ever for the life of me, because I'm not much of a tech man, frankly, I don't mind admitting it, I never did see what these data centers, the effect that they would have on energy and copper, and therefore copper demand. So all in all, Charles, it's a very distorted, unhappy marketplace. Unhappy for the people who haven't got copper, but whilst I'm not basking in the sun, I would like, in actual fact, the market to basically redress some of the problems, because I see the problems being major. We see now international positioning, with the Chinese having dominance over Southern Africa. We see Latin America being probably resistant to mining in the form of, look at Panama. Poor old First Quantum spent $10.3 billion to see their project. No, you can't work anymore.
Indeed.
That's the conditions there. A plant will rot in a few years. So that's not been good news for the market, or of course First Quantum. So we've got Latin America somewhat resistant to mining, and there's some good, decent projects in Peru. Then we see Southern Africa. Most of the projects are like the ones we're doing in Bizant and whatever, in Galileo, 8, 10, 12, 15,000 tons of copper. No really, really, really big projects on the drawing board. Nothing in Australia. That seems to have gone flat. So, the supply side is, whichever level you look at it, major, minor, intermediate, or small company. The supply side does not look very good at all.
But
Colin, 50 years under investment in the industry.
Yeah, Colin. So if I ask you a direct question, we're going to have copper out the ground in Namibia and Hope and Gorup this year?
I'd be very disappointed if we don't.
Okay. We're going to have copper out the ground in Silver King and Extract within the next few months, I would imagine, but you don't have to answer that question. And
I'll give you a very, very firm yes to that, because in a press release we did, in actual fact, say that we were very confident that Silver King will be in production shortly. So yes, Silver King, of course, is a smaller operation, but nonetheless our partners have developed it to a point where electricity is in place, the plant's in place, the first blast has taken place, and we're not very far from loading the plant up with chemicals and ball mill with balls. So on that basis, we have to be very close to production.
Very good. And I visited the asset that's part of Jubilee, and Galileo owns 23% of it there. So you're in production already there. Ultimately, the ore is coming out of the ground. It's off to Sable, and copper is going to be being produced. So, yeah, I think people have sort of missed this 23% that you have in that mine, because that's going to be a monster, I think.
The potential there is very, very interesting. It's a very neat little operation, and it shows the modus operandi of our little grouping. And if we step back, Charles, Kevin, and say, what were we 18 months ago as a little group? We're explorationists with aspirations for copper. Wind that clock forward to where we are today, and what sort of companies are we? We're production in Zambia, Silver King, and Cayenne, Sobe. We're about to strike. We're about to sort of consider starting up Shinganda. Down in Namibia, the story there. That we're only about 8 months behind with Ongombo, behind Bizant. So that's ready for production. So when you actually look at us, from being very much viewed on by the market as a exploration stroke development company, we're now a development stroke production company, and we've changed that profile in the space of 18 months. And what was that? Back to what Charles said, that we acquired companies which had great databases, already got resources. So in actual fact, we're blessed with our projects, which are production ready on a smallish basis. But attached to that production ready small basis is usually a large tract of exploration, which basically is attracted to a major, gives us the possibility of upscaling the whole situation. And of course, proving up the metallurgy by small plants. And when you've proved up the metallurgy and the mining and the resource, you will not have the problem in a year to 18 months, especially in the market we're forecasting, to get further money for expansion, growth, or alternatively interested parties who might be interested in acquiring the situation. So I think we're creating our own platform for investment and for sale. But meanwhile, we do enjoy mining. We've got a team who are basically equipped to take on what we've got. Not easy to find personnel in this business, mine managers and grade control officers, all of those disciplines, big and small, what make a mine work. But you usually find on an entrepreneurial basis that our partners are very strong. Our partners know their way through the system. They are not afraid of mining. And in actual fact, in terms of Silver King, it's us being supported, not the other way around. So we've got an operation that we're bringing into production, which is a good example of partnership in Zambia. Likewise, down in Namibia, our partner on the Ongombo project is very supportive, as is the one in Open Gorop. So this is about partnership and small mines with the potential for expansion, focused in copper, with the exception of Morocco, where we've got those antimony projects again, where the ball mill is working. Well, the old plant, in actual fact, the flotation plant, is making its way to Morocco to be installed during the first part of this year.
Very good. Okay, Colin,
I'm
going to bring in our second guest now, Aidan O'Hara. Hopefully I pronounced that right, from Fulcrum Metals Director. Aidan, how are you, sir?
Things are going great. Thanks, Kevin, for having me on the show.
So what does Fulcrum Metals actually do? Tell me what it actually does today.
Fulcrum Metals is a tailings company based in Ontario in Canada. We have two projects. We've got the Tech Hughes project and we've got the Sylvanite project, which has in total 200,000 ounces of gold with an in-situ value of about $750 million and a potential recovery of $500 million.
Wow, that's pretty good. Now,
Um,
how is that actually possible? So, I mean, you don't own the tech in this particular situation, so this has been a an environmental problem and an issue in this Kirkland Lake area anyway. So, how has it all come about, and who is it that you're partnering with, and what scale are they at in terms of the stuff that you're doing?
well, extract came from the Reynolds camp, the Reynolds Metals. They sold their business in 2013 for just over $12 billion. And one of the family members invented, along with Penn State University, this technology. So they had a large oil field in Kentucky, which they were looking to extract. It was a very heavy, or a very heavy oil sand, 15 to 35 API, and they developed a technology around that to see if they could extract the oil from the tar sand. And as time went on, they've moved further into metals.
Aidan, here's lovely to speak to you again after a few years.
Great to see you, Charles.
Yeah, why is being cyanide-free such a big deal with this technology?
Well, cyanide-free, it's the results basically that we're getting from being cyanide-free. With standard leaching, we were getting 30%, but with cyanide-free, we got on a results that we produced last week, we got 78% gold recovery, 95% silver recovery, 85% copper recovery, 96% tellurium recovery, and 20% gallium recovery. So,
yeah, and also, I mean, 70% recovery in approximately 3 hours, which is pretty transformative compared to others in the region.
well, yeah, the leach time is 6 hours. The back end dewatering is 1 hour, and the reagents and the water process, we can recover 80%, which makes a big difference to the bottom line.
Yeah, well, it's interesting, isn't it? Because I was at a resourcing tomorrow speaking to you guys. It must be a couple of years ago now. And
2024, I think.
Might have been 4, yeah, and turning waste into gold. I think probably the key thing is that A, the recovery rates are much stronger, but B, you're taking what is a problem, which are these kind of highly toxic dumps, which are a huge issue, not just in Canada, but across the world. And you're withdrawing, the precious metals. And then when you're returning those waste dumps back to where they were, they're drier, they're safer, they're stabler. So you're actually doing, not only are you generating capital, you're doing a huge favor in the regions that you're working in. Would you say that's fair as well?
Yeah, no, that's correct. We are a solution. There's plenty of companies out there that have tailings dams across the globe, but especially in Canada, where there's over 70 in our area, and they need to be remediated. And using cyanide is certainly not the way to do it. This new technology is a technology that the government are very happy to use, very excited about. Indigenous nations, First Nations are very happy about it, and the mining companies themselves are very happy with this new technology.
Yeah, and then the thing is, it's not just gold or potentially silver. There's also gallium, tellurium from the same tailings stream. And probably another thing to touch on is that, and I know this sounds really obvious, but when you're mining, you've got to blast rock out of the ground, put it through crushers, ore sort it, etc., etc. When it's tailings, your OPEX costs are significantly lower, right? But also, not only are they lower, you're now looking at extracting multiple metals from the same tailings stream. So this could actually be really, really efficient as an operation once you get going, right?
Yes, no, absolutely. I mean, when you're out on site, you're literally standing on gold. When the wind blows, it's blowing around you. We like in relation to getting a project started up, we've been looking at the Lassonde curve, and we kind of start in the second curve. So when we get started to go into production, we're actually saving 15 years and time, and that helps us become a scalable business with timeline, and it's the whole process is so fast dewatering is so fast that it creates a scalable business for us. And as you know, Charles, these projects are everywhere. The reason why they're everywhere is because there's never been a technology there available to unlock them. So we're very fortunate. We worked very hard to get the exclusivity, with Extract and Bechtel. It took us over a year and a half to get it, but we have the exclusivity. And, if you put the exclusivity into perspective, in this region, there's been up to 150 million ounces of gold recovered. So, as a rule of thumb, there would be 10% left in the ground, which is anything from 10 to 15 million ounces of gold. And we have the exclusivity in that area. So to put things in perspective, Fulcrum with a market cap of 15 million, we're a bit of a snip at the moment.
Well, 10 to 15 million ounces at $5,000 an ounce of gold is not nothing when your market cap is around 15 million, even after the recent rise and recovery. But I think you mentioned Bechtel there. For people who don't know who Bechtel is, which there might be people on here, just describe the relationship between Extract and Bechtel and how important Bechtel is globally to the mining industry.
Yeah, well, Bechtel are, they're the largest mine services company on the planet. Third largest private construction company. Extract and Bechtel 2 years ago signed a 20-year alliance. The two families have worked together for over 100 years. So there's a very, very strong relationship there between them. And, Fulcrum, 15 million market cap, to have that relationship with these two multi-billion-dollar companies, I think the market's missing something.
Yeah, it does seem to be the case. But, it's funny because I remember saying to you a couple of years ago when we first started chatting that you needed to get that master exclusivity license first, and then it would be able to re-rate. And it's kind of funny that that's exactly what's happened. Because because to be honest, you need that economic moat, right, to be able to invest in it over the longer term. Once you have that, then you no longer need to believe in it. You just need to sit back and wait for the results to come through. But just on this technology, because I remember, maybe you can expand on this a little bit. One of the advantages, other than the speed and the lack of cyanide, was that lots of new tech that you see crop up in the market requires a hell of a lot of kind of like fidgety gadgets that aren't off the shelf. But this technology uses stuff in a new way, hardware which already exists. Is that still correct?
That's correct. The hardware, the plant, it's all off the shelf plant. It's the technology that's the key. It's an ionic solution. We call it the Coca-Cola secret. So it's a very simple process.
Yeah, and Pepsi is not okay in that, which seems to be.
We're creating green gold here. ESG credentials are quite astounding. And like, as I said before, we are a solution to the problem. There's many companies out there at the moment that have large tailing dams and they need to do something with them, and we're here to help with that.
Yeah. Well, I think this is the thing, right? I mean, if you're looking at like the investment scenario in London, but just globally in general, what people are looking for is diversification, right? And when you're in junior resource, you're looking for not only high quality assets and decent management teams and skin in the game, which you and others in the company have, but also something that's a little bit different, that's not easily replicated. And that's what Fulcrum offers, right? The ability to invest in something which, if it scales, could generate very significant returns over the next decade or so. Would you agree with that, or how would you color the investment case?
Well, Tech Use is a 6.5 million ton project. Silvanite's 3.5 million ton. Gave it the in situ value 750 million, and a recoverable potential of 500 million. Like, it's a big project, but in the grand scheme of things, it's actually a really small project. There's other projects out there that we're looking at 100 million tons, 150 million tons, 200 million tons. This is just a huge growth story, developing for Fulcrum. And we've got the world, at our feet. We're the only ones with an exclusivity. And this technology is, as the guy saying, Bechtel, the thing about this technology is everybody's going to have to adopt it for two reasons: for ESG reasons and for economic reasons, because it just, like your traditional mining, ways, this is just going to push through, and those ways are going to be left behind.
They're going to be left behind, and you're
Yeah.
going to be the last man standing almost.
Well, see, the great thing about it is the capex is quite low, and for us to actually find the project and bring it from start all the way up to yes, we're going to break ground and build a plant. Like it's a 2 year timeline. It's very fast in
Well,
in the mining industry.
in mining terms, 2 years is. I
Yeah,
think
in
it's
mining
funny.
time.
Well, I mean, we were talking to Colin before, and it's kind of the same with you guys. I mean, the companies that I've looked at, over the past few years, and it's frustrating, right? Because you have to do so much due diligence and early stage work that the market doesn't appreciate, but is required. And now both of you are getting to the point now where the rewards are going to start flooding in. It must feel cathartic for you because obviously you had such a big hand in getting Fulcrum up and running at the IPO to finally see it start to all come together.
Well, we have this thing, at board meeting, we're always saying it's really been hard for us. Like the first 3 years has been really hard. People didn't understand what we were doing. We had to change from exploration into into a tailings company. Some of our shareholders didn't like that. Now the market's starting to cop on what we're doing.
Yeah, excellent. Good.
So Aidan, we've had discussions about how big this could be offline, and I mean, I think we have to be fairly cautious, but the potential for the company, both Extract and the mining information company, is that they want to take this like everywhere, and they want to take you with them. Is that the general gist?
Well, we like for every step we take, we got to prove ourselves. And we got to show that we're the guys. But we feel that we're the guys. We've got a very good relationship with Extract. We know William, the president of Extract, over 10 years, and we've got quite a good personal relationship there. Our next step, as we announced last week, was to build a standalone pilot plant. What we plan to do with that is to run our own tailings through it, and then as more companies come to us, we can also run their tailings through it as well. So that's just one pilot plant. I envisage us having many pilot plants in many jurisdictions, because there's tailings literally everywhere, and there's so many different companies out there wanting to deal with the hazard and the legacy issues that they have with these tailings. But there's also a huge amount of metals. I mean, globally, there's well in excess of $4.5 trillion of metals in tailings ponds. So, we're first
I'm sure Colin can introduce you to a few tailings. What do you think, Colin?
Well, I had the pleasure of listening to Fulcrum at another venue last week, and I was very impressed with the company and what they're doing. And I do agree with Aidan that the value is not recognised. We've been talking earlier about the absence of new projects, and of course, those projects have to be invasive. Aidan is going where basically the mining's being done. He's upgrading the remnants of past legacy mining, if you like, even behind a much better situation in terms of the environment, and at the same time benefits to everybody in terms of the metals which were actually sat in the ground, but they've been beneficiated and sold. So what a wonderful model. And I do agree with Aidan, the scope of material which is actually on the ground around the world is absolutely immense. And remember, 70% of the cost of putting those tailings there have already gone. So even from a sort of Fulcrum, from a cost and OPEX point of view, and time is OPEX and CAPEX, of course. It's got a hell of an advantage of sort of bridging the gap, I guess, in terms of metals like gold, but metals like copper, nickel, all of these things are massive dumps all around the world, some of which are basically a total liability to the mining company, and they don't know where to start next. It's almost the same story, I think, Aidan, that, and I've been in this situation. I think that's why Kevin said that Jubilee Metals and Jubilee Platinum, and and listening to you, I was almost listening to myself about 10 years ago. That's why I enjoyed listening to you so much. But nobody recognizes it. I used to, in your position, tailings business, walk into the major mining companies and say, "We'll clean up your dump, won't cost you a penny from CapEx, won't cost you any op costs, and we'll give you a 30% share. The number of times I was thrown out with that concept, I could never believe how they couldn't understand the maths, the environmental shareholder ESG advantage, every single advantage, and the way you articulate it. And you're going through the same process, but I think your technology sounds great. And I think you probably will go, the technology will go some way to bridging the gap between supply and demand in a lot of metals. So I'm very interested in the story. And as I say, I had the pleasure of listening to it only probably a week ago, 10 days ago. And equally today, I've enjoyed listening to and being part of your presentation. So I can only say that what you've said is I agree with it entirely. And sadly, I think we both sit in this position. They just don't get it, Aidan. The majors just don't get it. The opportunity is there. And in your case, it's essentially not only progressive, it's solving a legacy problem for them. But they still won't join in. They're looking for the deliberate mistake, the flaw, or where they've got it wrong. When in actual fact, the guy in front of them has developed something which can help them, can solve a problem with the communities they're in, and at the same time share the benefits of what in actual fact is a problem. But difficult to sell, but I'm sure you will, and I wish you well with it, of course.
Yeah, thanks so much, Colin. We are super excited. I think it's taken the market a long time, to kind of understand what we're doing. There wasn't like any other companies really out there doing, exactly what we're doing, and there was no gauge to figure out, where Fulcrum was. But I think since we put out our results on the phase 3 and announcing that we're doing a pilot plant, the market can see that we're actually serious about this, and like our partners are they're a good endorsement for where Fulcrum is going. So we're very excited.
Yeah, I think it cleans up an environmental bomb that hasn't gone off yet, but it's starting to go off in many things. We've got another company, I think, that me and Charles are involved with, called Halo, who've got copper in South America, and they're doing not a similar thing, but they're basically cleaning up the situation. The beach is horrendous. It's one of the worst polluted places in that particular jurisdiction. So I think you're going to help the planet and hopefully make us a hell of a lot richer at the same time, Aidan, as well as yourself, which is obviously a good win-win.
Kevin, just one other thing about the technology as well. When the process is finished, the tailings is like 80% dry, so it can be used. It can be taken off. It's not like you have a problem. What are we going to do now after the process is finished? So we can take those tailings. We can, they can be used as mine backfill, or they can be used as aggregate in the construction industry. So the whole cycle, the whole ESG cycle is comes into effect. So there is a lot of interest from ethical groups on what we're doing as well. So yeah, it's an exciting story.
The irony of it with both you, Colin, and you, Aidan, is that the majors just don't seem to have done their jobs properly over the past 2 or even 3 decades. They're meant to put some money into the ground for exploration. They've barely done that at all. They're meant to make sure the tailings dams are safe and contained. They don't, by and large. I mean, they do for a time, but once the mine has been shut off for 10, 15, 20 years, they wash their hands of it often. And it almost seems like you're developing independently solutions to problems they've created that they should have dealt with all the time. And eventually they'll have to circle back around and pay a lot of money, either for those exploration assets they should have explored themselves, or for technology to deal with tailings issues that they should never have allowed to create in the first place. Colin, would you agree with that?
Yeah, I would. I would wholeheartedly agree with that. But then I go back to my original point, is that in walks Fulcrum, offering to, we've got the technology, we'll put the money in, we'll clean the place up to you, and it won't cost you a cent time, it won't cost you any resource allocation, and we'll actually give you a free share. That's the sort of deal we dream about. It shouldn't be difficult to sell, should it? You articulate it well, Charles. As always, you've got it in you've got it in one very, very quickly. You don't really need 4 years at Harvard to understand the benefits of somebody coming up and sort of solving a problem, a legacy problem for you. And yet you have to work like Billy-O to get through the door, let alone get into discussions. To get through the door is a clever bit. So I agree with Aidan. I agree with you, Charles. Once the recognition is here, that I would have if I, what do we always say in life, if I was running one of the majors, I'd be looking at my dump inventory as the first point for minimum capital expenditure, minimum time to get into production, and an offset for me in terms of being a contributor to that gap in a lot of metals that we envisage. Why try and invent new technology, Charles, when Fulcrum and others have developed that technology? So you've got the entrepreneurial instinct, you've got the scientific approach, and somebody walks in your door to take off a legacy problem from you. It shouldn't be that difficult to understand. But boy, I can tell you what, in between my statement and Fulcrum being to where they want to be, Aidan and I know damn well that's a lot of leather, that's a lot of leather that will not be shoes. But it's worth it. And all of a sudden there'll be that transition where they'll look at the small miner for the hard rock and for the new mines. They'll look at Aidan and Fulcrum and people like that to clean up their legacy problems. Of course, quite frankly, new capacity ain't there. And in most of the metals you talk about, it just isn't there. So no, as I say, it's not 4 years at Harvard to understand the situation. To in actual fact, get the industry in totality to address the situation is somewhat different.
Indeed. Aidan and
that's
Colin.
what Aidan and I are paid for. Get on with it, produce some metal at a price lower than it costs you to get it out of the ground. Or in Aidan's case, off the surface and clean the place up.
It's funny how that very simple, get the metal out of the ground and get more money for it than what it costs is actually the entire investment case for all of these things. Colin, Aidan, right. Lovely to chat to you both, and hopefully we'll see you both in the very near future.
Thank you very much. I appreciate it.
Thanks,
Thank
Kevin.
you, Kevin. Good luck, Aidan. All the very best.
Thanks very much, Colin.
So, Charles, a couple of interesting guests there with Colin Bird, basically putting together. I almost think he's like a mini major. There is 4 or 5 companies. What do you think?
Yeah, I think he's like as I said in the chat with him. I think he's doing the work the majors should have done. You know, the majors did a lot of exploration on most of the assets held in his portfolio. And then they decided they didn't want to do exploration anymore because, you know, metal prices weren't so great a couple of decades ago. So he acquired them up, did all the work they should have been doing for years and years and years. And now a lot of them are going into small-scale production over the next few months. And I think the important thing is, yes, obviously you're generating cash flow, which is exciting and fun, but also you're learning more about the asset and you're going to be able to explore them more. You might find that they become things that become very saleable a year or two later. And who's he going to sell them back to? Probably the same majors who offloaded them in the first place.
Yeah.
For a lot more than they could have, you know, spent exploring and developing it themselves. But here we go.
It's the circle of life. It basically is. It just goes around in a circle there. And we are definitely coming into a super cycle in terms of resources. And, you know, I personally think that in 2 to 3 years' time, we're going to look back at some of the prices of some of these stocks and go, how on earth was it that cheap? Well, I really do think that's going to happen.
Well, it's the super cycles, right? I mean, mining is super cycles, and it goes up really, really, really fast and stays up for a couple of years, and then it comes down, and then it just goes up and down, up and down. And I think probably one of the more important things to bear in mind is that, you know, we're not at the bottom anymore. It is rising. It's got a lot further to go higher. But also it won't stay at the top. When it does reach that top and, it does it for a couple of years, that's also, an important thing is to position not just yourself personally in your own portfolio, but also the companies themselves. I mean, remember back in the pandemic days, right? When money was free and share prices were flying and cash was going everywhere. If you had at that point done a small amount of dilution and raised a few million and stuck it in the bank for a rainy day, you would have been in a far better position than if you didn't. And almost nobody chose to do that, right? And I think that's probably the lesson to learn.
Join the club. I think when I look at my pension now, I try to put my hands over my eyes. Well, it's not a good situation, but anyway, such is life.
The fun game is when you invest in a stock, right, and maybe not with particularly much money, and the offshot it might do a 30, 40, 50x, and then you get that 50x, and it's exceptionally rare. And there are people out there who don't sell any and just watch it come all the way back down to like a 10x. And they still, obviously you still won a lot of money, but you could have taken some off the table at some point. But people don't want to play that game.
Yeah, on that note, I've been trying to, inverted commas, explain or lecture to people that at a certain level, you should be taking your initial cash off the table. What you decide that level is up to you. 1 times, 2 times, 3 times, whatever you decide. But you take your initial capital off the table, you're on a free ride, and then subsequently you let the rest of the money go up to a certain level, and then you take the same amount off again. Now you're 1 times up, and you still have your holding, which is worth X. Now, if you have a real conviction, maybe you don't do that. But I personally think that this is the right way to do to trade. Even if you are an investor, to hold everything forever is bananas. Wow. And the monkeys that you wrote about is, some people are doing that, and I don't get it.
Well, you're growing the banana tree. If you want to stretch the analogy a little bit. I mean, I agree with you, and yet I've not taken that advice repeatedly over the past couple of years. And there's plenty of stocks I've not sold anything at all. Some of which are up 10, 20, 30x. Because the investment case continues to grow and get better and stronger. But what I do think is quite valuable, if you don't want to sell, is stop losses. And I know in the small cap market, everybody hates stop losses and everybody thinks, oh, they're the worst thing in the world. But if you just pay for the privilege of a guaranteed stop loss, particularly on sort of like larger companies, the market cap's above 100 million, say, then if you wake up one day to a terrible RNS and the stocks drop 45%, you're protected. And I think that's also incredibly valuable. But in general, I think in this market, there's millions to be made, not financial advice. But if you've been in the resource sector in particular and you've been waiting for it to come, now is the time. And so, yes, de-risk, position yourself, portfolio diversification, sure. But holding on for gold is also super important because it may not happen. This kind of structural deficit may not happen again.
Yeah, but by selling your initial investment when you're up 3 times is not going to do you any harm. No. Because that rotation of your cash should then go into something that hasn't gone up 3 times and has good potential. I mean, this is the argument of decreasing returns as things go up in value, because you've got, let's say you put £5,000 in something and it becomes £50,000. The reality is, what is the chances of that going from 50 to £500,000, or should we be investing in the £5,000 asset again, or the lower asset, if you like, again, so that we can go on that journey again? Now, the argument is that there aren't many of these about. I would argue with you that over the next few years, there are going to be loads of them, much more than we've had in the past.
Well, I think, that's probably fair, just because the rising tide will lift all boats. But I also think it depends on what kind of stocks you're investing in and the amounts of money you have put into them, right? Like with my portfolio, I like to say, right, you've got the core portfolio stocks. This is junior resource in particular, so not your entire portfolio, but your core portfolio stocks, which might be, things like Greatland Resources, right? Or Sovereign Metals or Amarok. Big, large institutions involved, healthy cash balances, growing, happy, great. And you kind of know if you put money into these companies, as long as you don't mind a little bit of volatility, it's unlikely it's all going to lose. Then you've got growth stocks where you put, maybe less money into them, but, they could do the 10x. And then you have moonshots, right, where you put not so much money in, but they could do 50 or 100x if you're lucky.
Yeah.
And I think the thing is, with moonshots in particular, if you think there's a potential it could do 100x, you've got to be able to ride that volatility out. Not everybody can. And that's probably what, so bringing it back to your point about selling, one of the key things is the position that you have, you need to be able to know you can hold it for the rise or for the fall. So however much money you put into it, it needs to be an amount that you can cope with compared to the risk level when you see that volatility. If your whole portfolio is £1 million, right, and you put it all into one microcap and it goes up to 1.3 million, you're probably going to sell it. But
anyway. You probably ain't going to be able to sell it. Let's be honest.
No, you're not. The reason it went up to 1.3 is because you bought it.
Yeah, I mean that's the other thing is I've started joining the 1% club. That in these smaller cap companies, I want to own 1% or at least 1% because I think if you own 3, 4, 5, 6, 7, 8, 9, 10% of some of these micro caps, which some people obviously can, and it's not a big deal, then you are in it for the game. You are not going to be able to trade out of that. 1%, you can trade in and out. You can if you need to, in terms of either taking your initial cash out or doing well. But anyway, it's a good conversation. But I really like Fulcrum Metals as well. I think Aidan and Ryan have got something big on their hands there, and I think that is going to be one hell of a story over the next few years. But anyway, let's not stick on that. Give us your Monday Upbeat Markets situation for any stocks you're talking about.
Oh, there's 3 that I'm looking at the moment. United Oil and Gas piston coring has started. This is something we've been waiting for a very long time. If that piston coring is successful, chance of success of a drill goes up to 1 in 3, which is pretty much as good as you can get for frontier exploration. So getting a drilling partner, it seems like it's likely to happen if the piston coring is successful, which I believe it will be. Second is Helix Exploration. Share price has sold off a little bit, but they have started production now from 3 wells, and a 4th will join relatively shortly. And at that point, you'll be looking at $12 million a year of annual revenue. With off-takers are going to be on site shortly too. So those 2 kind of, I think, really, really worth keeping an eye on. And then the third one, which is worth keeping an eye on for March, which is only a week away, is Sovereign Metals, which I just wrote another update on. We've got the MRE upgrade and then a definitive feasibility study backed by both Rio Tinto and the IFC, which is a segment of the World Bank. That thing is going to fly, assuming all goes to plan, which I assume that it will. So those 3 for me. What about you, Kev?
Well, you sort of argued with me before we started talking, but I think First Class Metals is free money at the minute. I have to be honest. I think it was 2p, market capitalization of 4.5 million. It's got lots of assets. It's got the Zigzag. It's got Sunbeam. It's got, and I know for a fact that they're working on some good stuff because that was announced. 79th Group sold off. I think it was just over 20% to high net worth individuals at 1p, and they've got 9 or 10%. Something's working in the background for that. Plus 79th Group maybe have to sell, and that's why there's a bit of stock about at the minute. But I think if you've got any patience at all, that's going to go back to 2p in the next few weeks, at the very least. Forget about what you think about First Class Metals. I just think it's one of those stories you had free money on an overreaction last week, I think it was. And I believe that is the case as well. The other one, if you're not in Delta Gold Technologies yet, I am super excited by it. I can't see how this isn't going to be worth a lot more money than it is now with the Penn State deal, the Toronto deal. There's other deals coming. They, I think, are very excited internally about what Penn State and Toronto have actually found. But forget that. The scenario is just building this structure of universities and knowledge base. Then these guys in Meta, in all of the different AI companies that are going to be involved, it'd be like dropping a penny for them to say, we'll give you $500 million for this company.
Yeah, I think it's a project generator aspect, right, which is going to be interesting. So rather than just having like 1 or 2 experiments, you have multiple across different campuses. The thing is with quantum computing is it's incredibly complex and probably beyond both of our minds. to be able to analyze super in depth. But one thing that is true is that if you crack even a quarter of 1% of the wider problem, you become incredibly valuable. While the wider sector is going down a lot, the amount of capital that the majors are throwing at it is just extreme. And if you have anything that looks like it will be mildly disruptive, you get on their radars immediately. And this will already be on their radars, along with anything else in the sector. But we shall see. But you are right. If they get it right, then the returns could be enormous.
Yeah, absolutely. And okay, so let's throw it out there just so people can have an idea. If you had 5 conviction plays for the rest of 2025, what would they be?
2025? Oh well, let me just look up what we did well. Have that, yeah. 2026. I don't know. Well, that's the thing. Like I was saying, the difference between like something that's core portfolio and something that's a moonshot. I think that there's a huge difference. I would say one that I would, again, not advise, but one that I do have my own money in. Yeah, I put my money where my mouth is.
Well, I think this is the best judge. Where do you put your money, right?
Where do you put your own money? Oh, yeah. Well, I think sovereign metals, is one, simply because that MRE update comes out, the DFS comes out, it's backed by the World Bank. That mine is going to get built, right? That mine is going to get built at some point, and people who are invested are going to benefit from that. Amarok is another one, which I'm confident of, simply because I think that the US government is going to provide them with some kind of funding. And if not the US, then it'll be the Europeans through the Danish. So those two, I think, are, pretty good. In terms of AFC Energy is another one, I think. We can put that in a third one. It's already risen pretty well, but I just think that the people there are just exceptional, and the technology is just going to work. And that's going to do really well over this year. And then in terms of moonshots, I mean, there's quite a few. There's quite a few that I think could do really, really well. I think, Stallion Uranium. I had a chat with the Stallion guys a week or two ago, and it's listed over in Canada. But what they're doing over there in the Athabasca, that's a potential 10x this year. And then, like I say, United, if it comes back with successful piston coring, Defense Holdings when a first contract gets announced. There's Solvonis, Imupharma, they're waiting on deals. There's just so many now where the potential is just huge. So it's kind of hard to narrow them down. And I think probably your best thing to do is to have a portfolio rather than just say top 5, say 15, 20. And interestingly, I know there's a lot of people with more positions than that. I think 20 is roughly where you can max out, where you can cover. Not, for me personally, I can probably do a bit more. But if you're not doing it professionally or full time, 15 to 20 positions, I think, is where you can keep on top of the investment cases, and probably no more than that in terms of individual stocks. I mean, what would you say? Would you agree with that?
Well, I'm just going to give you my 7, 8 top positions.
Ooh,
and not in any order. So these are not the financial order, but these are my top 8 positions. Kendrick Resources, for reasons which we've just discussed. Fulcrum Metals, because I think potentially over the next year and also the next 3 to 5 years has got blue sky potential. Extract Resources because of Bush Ranger, and also both Silver King and the Antinomy will be producing in 2026. AEG, Active Energy, for Dubai and Saudi AI supply of energy. I think it's going to be absolutely massive. Astrid Intelligence, which is basically my play on Tau, because I like Tau. I like the bit sensor network. The whole AI away from the big boys is basically how I'm describing it. Delta Gold Technologies is also there. Bazant Resources, because they're going to be producing within the next, I believe, in the next sort of 6 months, but it before the end of 2026 anyway. And Blue Sky Ajax Resources as well, because I just think that Ippolito's is onto something, and the potential in those projects is vast. So there's two,
So,
4, 6, 8 of those stocks. They're the biggest positions I hold.
so it's interesting, right? Because I'm kind of like halfway through an article about like what the next GMET might be, right? Because Guardian Metal, formerly Golden Metal, one of my biggest winners, one of your biggest winners, and for people who were listening to us, 2 or 3 years ago, mid 2023, done extraordinarily well. But what's the next one? Obviously, you can say, "Oh, M&M, there is there's a million just like it, but not quite like it," which is true.
No, there isn't.
But what do you need? Okay, so to compare it, it needs to have like a small market cap to grow its base from. I think is important. You need to have a young, energetic chief executive officer who has something to prove. It needs to be a asset which has the capacity to grow, and most importantly, probably it needs to have investors with conviction in for the long term. And so Ajax fits that bill, I think, pretty well.
I think it does. I think Ajax fits that, and I also think you change the G to an F, and that also fits as well.
Indeed.
I think those two have got the greatest potential to do exactly what GMET did.
And then interestingly, I mean, if you look in the tungsten, obviously there's Great Western Mining next door, which could be an interesting early explorer to have a look at.
Yeah.
You put a mill on Pilot Mountain, it will eventually want more ore, and that's the investment case there. But also, I mean, obviously in Devon and Cornwall, a lot of tin and tungsten plays, with varying degrees of strength and support. But then it's kind of interesting. I found like where I've had most success, obviously gold, but also the 4 Ts, the tin, the tungsten, the titanium, and the tantalum. Ethereum is another great one. Switch metals.
Well, if I was to put a ninth one on this list of the biggest holding I have, it's Ethereum.
Yeah. So, but it's funny, isn't it? Because whenever you were at Indaba actually recently, right? And I skipped this year, but I tend to go every other year. And whenever you go to any of these conferences, everybody is over the age of 95. Is what it feels like to me. Which is going to be a big problem in the mining world. But it's kind of interesting that the companies that I probably have the highest conviction in nowadays, at the very early stages before they go into production when they're explorers, it's the one with very young CEOs comparatively. Ones in their 30s and 40s, not in their 60s and 70s. And you're going to see this pattern repeated, I think, over and over again.
I think I agree with you, and that is not a dig at Colin Bird and all his companies. I think it's just I think what you need is a young, energetic wheeler dealer, and that basically is what Oliver Friesen is. That I think is what Ippolito is. I think ultimately with Fulcrum, I see Ryan as a young guy who wants to get things done, and I think he will. I think with Colin, you see immense knowledge of what's about and a great dealer. He's a good dealer, and therefore he has managed to have stuff in his asset base that I think if the majors came knocking, all of the companies, Kendrick, Extract, Bazant, Galileo, African Pioneer, they've all got assets that those majors would want. All of them.
Yeah, they do, and I think this is the thing, though. This is, but Colin has spent the past decade building up these asset bases, and the other thing which I find quite interesting about him, if you actually look, obviously a lot of capital has been raised and share prices have come down. They're recovering now, but the amount of drilling that he's done over the past decade, you can't really compare it to anybody else. The thousands and thousands of meters into the ground. That data set will be valuable. As the copper price goes up and majors start realizing they need more supply, that's where they're going to head to. But we shall see.
Yeah, and as he said on the interview, he's not banking on a much higher copper price. But my argument is very much, as we see the depreciation of the US dollar, we're going to have a higher dollar price copper without doubt, as far as I can see. I can't see how it's not.
Well, there's not enough copper, as simple as that. You don't really actually need a bigger argument. There's just basic economics 101, supply and demand. there's only so much copper, and the amount of copper being generated is falling, and there's only so much demand, and the demand is rising. So when you have falling supply and rising demand, the price will go up, and if the US dollar weakens at the same time, then happy days. But I think it is also... Go on.
Sorry, go on. No, you go on.
I was going to say, I mean, the other thing is, you know, when Colin said $11,500 copper he'd be happy with, very happy with, it's the same with the gold price, right? Like, it's so easy to sit here and go, take $5,000 gold, you know, for granted. And yet, when I first started tracking Amarok, or even, you know, when Greatlands took over the farm, what was it, September, October 24, I want to say roughly then.
Yeah.
You know, what was gold then? 2,500, and Amarok it was 1,500 a few years ago, and they were looking at being profitable at those prices.
Yeah.
You know, copper at $11,500 is great. I remember when in Extract when was it? The Bush Ranger racecourse and that feasibility study came out, and obviously it was a disappointment. But where it's located in Australia is great, and I think the key thing I remember thinking was, well, you know, to make this work, copper has to be $10,000, right? Now, added a bit of cost inflation, it probably needs to be worth sort of $10,500, $11,000 copper. But that asset, along with many others, are now viable when they weren't. They were a disappointment then. I don't think it'd be a disappointment now if it were to be released today.
Yeah, how much do you think Bush Ranger could be worth at $18,000 copper?
Well, a fair bit, but what I'm really hoping for to see is when Bazant with Mankind vended Mankind into an ASX company, it instantly re-rated and they got a bunch of shares and they were able to sell it off for a load of capital, which is currently paying to get Hope and Gorob off the ground, right?
Yeah.
I foresee a world where Colin does exactly the same thing. He vends Bush Ranger into an ASX listed company, and either it gets sold from there or it becomes its own thing and takes a life of its own and you get shares. But I think it's probably worth, you know, and again, not financial advice, and I know it sounds really rampy, so, you know, I don't even want to say it really, but it's probably worth tens of millions already right now.
Yeah,
So,
I don't think that sounds rampy, because I think it's worth over 100 million, but anyway.
Oh, okay, fair enough.
I am
of
the
course
rampy,
you do.
you're not. The interesting thing is that there's about $30 or $40 million of fees that have been paid drilling this thing, right? So they have to be paid before there's any even additional valuation added onto the top of that. So my view is that the starting bid minimum would be $50 million, and then, you know, take your pick. At 18,000 copper, Bush Ranger could be worth. It could start with a B, not an M.
Oh God, Kevin, I'm not going to comment on that because that's that's too far. I think if Colin turned around tomorrow and said we sold Bush Ranger for 20 million US, I think, you know, you might think it's worth a lot more, and it probably is worth a lot more. But I think most would be incredibly happy with that result. But I think it, you know, if it gets vended to an ASX company, it could be more. This is just my view. But
I think
go on.
I don't think Colin would sell it for that, but the reality is he might sell it for that or maybe twice that if it was in shares that could then appreciate, which is what you're talking about. And I think that's a positive. But we are waxing lyrical and talking crap, so take it as you wish. Anyway, as we say every Monday, you know what it is. It's Monday Upbeat Markets. Please hit that subscribe button. And remember, mum's the word.
This podcast was brought to you by Monday Upbeat Markets. If you would like to appear on a future episode of the MUMS podcast, please email mondayupbeatmarkets@gmail.com.